I'm joined by my colleague Karen Manczko, who will provide an update on the Wespath Fund's performance. Karen, thanks for being here.
Thanks, Joe, and hello, everyone. It's great to be here today.
The markets were positive for the second consecutive quarter after having an extremely volatile 2022. Given these positive results, how did the Wespath funds perform for the quarter?
That's correct, Joe. Though despite this positivity, there was still quite a bit of turbulence within the quarter. After inflation slowed for a sixth straight month in December, investors began the year optimistic that the Fed's rate hikes would be coming to an end soon. With this said, the U.S. markets were up roughly 7%, and international markets were up 8% in January. Moving into February, inflation proved to be a bit sticky, resulting in concerns that the Fed would need to continue a more hawkish stance in the near term. The U.S. market ended the month down 2.3%, and international markets were down 3.4%. As we entered the final month of the quarter, the financial sector came under considerable pressure after two U.S. regional banks failed and Credit Suisse was rescued by UBS. Fortunately, the U.S. markets ended the month of March up 2.7%, and international markets were up 2.1%. With this said, you can see that the Wespath equity funds ended the quarter in positive territory, with both our U.S. and international equity fund composites up 6.5% to 7% net of all fees. I'm going to review the individual contributors and detractors to the fund performance here in a moment.
Karen, it looks like the fixed income fund also had positive results for the first quarter. So why don't you tell us a little bit about those funds?
Of course. Similar to the equity funds, the bond markets also had mixed results due to inflation coming in higher than expected in February, and then the bank turmoil, which pushed yields down and was supportive of bond prices in March. You can see on the chart that the fixed income and inflation protection fund composites ended the first quarter positively. The positive performance of our equity and fixed income fund composites led to our flagship balanced portfolio, the multiple asset fund composite, ending the quarter in positive territory.
Thanks for that performance update, Karen. Any thoughts on the trailing results?
Yes, it's great to see the funds end the quarter in positive territory. Unfortunately, the gains we saw did not fully offset the declines that we experienced in both stocks and bonds last year. But returns have improved since the end of 2022. If you look at the 3-year, you see that the multiple asset fund composite was up over 10% net of all fees, and the equity funds also posted strong double-digit absolute returns.
So before we move on to the next chart, are there any final updates on the funds that you wish to share?
I do have one update that I want to know. In February, we updated the benchmark for the Inflation Protection Fund composite. This fund is a unique fund and was created to protect our client portfolios against unanticipated long-term inflation while providing income. But the fund has diverse holdings, and there aren't ready-made benchmarks currently on the market that encompasses the underlying strategies within this fund. Therefore, we've created a custom benchmark. The prior benchmark included both U.S. and non-U.S. inflation-linked bonds, plus had an allocation to commodities. Beginning in February, we adjusted the benchmark to remove the non-U.S. inflation-linked bonds. Therefore, the benchmark is comprised of U.S. Treasury inflation protection securities and commodities. The rationale for the new benchmark is that it has fewer components, which makes it easier to understand. It's also more comparable to our peers and better reflects the exposure of the fund.
Thanks for that explanation, Karen. Moving on, earlier you showed how the multiple asset fund fared relative to its benchmark. How does the fund look relative to other balanced funds?
This chart showcases the multiple asset fund composite versus a universal balanced fund. This slide measures how our balanced fund composite performed relative to other balanced portfolios and funds that are currently on the market. We are using a universe that is compiled and maintained by Investment Metrics, which is a well-known reporting provider in the investment industry. Looking at the chart, you can see that the multiple asset fund composite has performed in line with the median for the 1 year and above median for the 3, 5, and 10-year time horizons. For instance, for the 10-year time horizon, the multiple asset fund composite outperformed 59% of its peers.
Can you tell us about the individual fund contributors and detractors for the funds for the first quarter of 2023?
Starting with the multiple asset fund, the fund outperformed by 30 basis points in the first quarter. The primary contributor to the fund performance was the outperformance by our International Equity Fund and Fixed Income Fund, which together makes up 55% of the multiple asset fund.
You mentioned earlier that despite the quarter being volatile, the equity markets ended in positive territory. How did our equity funds perform in the first quarter on a relative basis?
Starting with the U.S. Equity Fund, this fund modestly underperformed its benchmark by 7 basis points for the quarter. But let's start with the positives. During the quarter, we saw value stocks underperform growth stocks, which was primarily due to the decline in financials and specifically regional banks, which are value companies. Therefore, the fund's underweight to large cap value stocks contributed to the fund performance. Also contributing positively was the outperformance of our active managers within the fund due to their strong stock selection, specifically in information technology and consumer discretionary.
So that's particularly interesting given that I recently read an article in the Wall Street Journal stating that most active managers struggled in the first quarter due to their bearish positioning. It's great to hear that our active managers did well in this market. Are there any further updates to the U.S. Equity Fund?
Quickly, I do want to note the detractors to the performance. Unfortunately, the contributions I noted earlier were offset by the fund's underweight to mega cap stocks, which were up 29% for the quarter. Also, the fund's overweight allocation to small and mid-cap value stocks detracted. Finally, the fund's allocation to private equity and private real estate modestly detracted since these asset classes typically lag when there's a strong public market.
In the month of March, the decline of regional banks like Silicon Valley Bank and Signature Bank dominated the headlines. Does Wespath have any investments in these banks?
The U.S. Equity Fund had a very modest allocation to these two banks, which did not materially impact the fund's performance. It is worth noting that none of our active managers had allocations to these banks. We held these positions in our passive strategies within the fund. Now turning the attention to our International Equity Fund, the fund outperformed its benchmark by 1.21 percentage points. Similar to the U.S. Equity Fund, the fund's active manager stock selection in information technology and consumer discretionary contributed to the strong outperformance. Modest detractors to the fund performance were the fund's allocation to international private equity and private real estate and our ethical exclusions.
Let's move on and highlight the first quarter performance of our fixed income funds.
The fixed income fund outperformed by 16 basis points for the first quarter. The fund's allocation to emerging market debt contributed as we saw the dollar depreciate in the first quarter, and also the reopening of China was a positive contributor to the performance. Also, the investment manager's issue selection, particularly in the Mexican peso, contributed. The fund's Core Plus manager, PIMCO, had strong issue selection, along with the fund's allocation to investment-grade credit, as we saw spreads tighten in the first quarter, which was positive for performance.
And what affected our final fund, the Inflation Protection Fund?
The Inflation Protection Fund underperformed by 14 basis points for the quarter. A contributor to the fund's performance was manager selection in floating rate senior secured loans. Unfortunately, the fund's allocation to commodities, specifically energy and metals, were a key detractor, as we saw this asset class down 5% in the quarter. Also in January, the fund was underweight UK inflation-linked bonds, which detracted from performance.
Thanks for that update, Karen.